Why is diversification crucial for wealth building and retirement? Imagine trying to win a game by putting all your chips on one number. That's a risky move, especially when planning for a long retirement. Diversification is like spreading those chips across many numbers to increase your chances of winning. It's a key part of building wealth and making sure your money lasts. For African American families, who often face unique financial hurdles, understanding why diversification matters can make a big difference. Many African American families have less wealth than their white counterparts. For example, the median African American household aged 70 and older has a net worth of just $36,900. In comparison, the median household nationwide has much higher wealth. When it comes to financial assets, African American retirees hold around $300, while the national median is about $13,000. This gap is partly because many African Americans have historically invested less in stocks and other high-return assets. Instead, they tend to focus on tangible assets like real estate, savings bonds, or life insurance, which are safer but often grow more slowly. This focus on physical assets makes sense given past experiences with economic inequality. But it also means missing out on the growth potential of diversified investments. When most savings are in lower return assets, wealth grows more slowly over time. Research shows that if African Americans had invested more in stocks and risky assets during key periods, the wealth gap could have been smaller. The power of compound growth over decades makes a big difference in wealth building. Diversification allows you to tap into growth from many sources. Combining stocks, bonds, real estate, and other assets creates a balanced portfolio. This mix can generate higher returns and provide more income during retirement. Studies suggest that adding guaranteed income options like annuities and increasing stock investments can boost annual retirement spending by over 20%. It also helps reduce the risk of losing money if the market dips. Another reason diversification is important is risk management. Different investments perform differently depending on the economic cycle. For example, stocks might do well when the economy is growing but struggle during downturns. Bonds and real estate can act as buffers during tough times. By holding a variety of assets, retirees avoid putting all their eggs in one basket. This approach is especially vital for African American retirees, many of whom relying more on personal savings and earnings than on pension income. Without a pension that pays a steady income for life, they need their investments to last a long time. Building a diversified retirement plan doesn't mean giving up on tangible assets. It's about adding stocks and bonds to real estate and savings. For example, someone might own property while also contributing to a retirement account, like an individual retirement account. If they don't have access to workplace plans, opening an IRA can help them participate in diversified investing with tax benefits. More African Americans are starting to see the value of stocks. The number of Black Americans with incomes over $50,000 who own stocks increased from 57% in 1998 to 67% in 2015. People are recognizing that including stocks in their portfolios can help grow wealth faster and provide more security for retirement. However, only about 44% of African American families have retirement savings, compared to 65% of white families. Expanding access to diverse investment options through workplace plans, community programs, and financial education can help close this gap. When families understand how diversification works and get help choosing the right mix, they can build wealth more effectively. In the end, diversification is a smart way to grow savings faster, protect against market downturns, and make sure money lasts through retirement. It helps African American families participate more fully in economic growth and move toward greater financial security. Without it, wealth gaps could continue to grow, but with it, there's a real chance to build a stronger financial future.